For anybody who follows this channel, you know that I believe that we have ended a previous era, which I call the Great Central Bank Financial Era. I feel it ended in 2019, but I think the official date's going to be here in May of 2025. And it's coming down with UBS and what's going to happen with them. On the TikTok, I have pinned my 3 UBS videos that we've done in the last, month and a half, somewhere around there, okay, 6 weeks, 2 months, okay, on their continuing issues with the Swiss authorities. And to put it bluntly, the bank is too big for the country. The bank has a $1.7 to $2 trillion balance sheet, and the entire economy of Switzerland is $800 to $900 billion. So it's 200 times bigger. United States, to give you a reference point, every bank added up, credit union, so forth, is basically 20% of our GDP. So we can take care of our banks. And so what's happening here is that the Swiss are terrified. And they have asked UBS that they want them to put up another $25 billion in capital. And UBS is fighting this tooth and nail. But now we've moved into a new era. And this era is going to be way different than the past. So the lender, UBS, had suggested to lawmakers that it could permanently limit the size of the division, which is the investment banking division, according to a person. The investment bank already has a self-imposed limit of 25% of UBS's risk-weighted assets. The only thing I'm going to say here on this risk-weighted assets and 25%, anytime that you see when we're discussing banks, the CET1 or this, if we're not talking about one thing and one thing only, which is tangible common equity, TCE, your share price times your number of shares gives you how much money you have to write off against losses. That's it. Okay? All these other measurements that they come up with, the banks, is all basically smoke and mirrors. All right? So when you look, they say here, the proposal comes, UBS seeks to alleviate the concerns of regulators and politicians that the size of the combined group poses a threat to Switzerland's economy, okay? Which it does. And you can see here in the middle, the UBS boss rejects that, to put up more money, okay? We're here to bail them out, and they're not here to be mindful of their business. And so they literally say, look at the first paragraph here, the proposed capital reforms would damage in international competitiveness and have tensions between the lender and the Swiss establishment. Well, too bad, okay? One, we don't want you to be that competitive. That's what the Swiss are saying. And two, we're the guys who have to bail you out, so we have something to say. And the the finance minister literally says, UBS lobbying is both visible and unmistakable. The government has got one goal, that in the event of a crisis, a UBS that is systemically important is resolvable. This means that the systemically important parts of the bank can be separated in Switzerland. So what do they mean by this? Systemically important are deposits, right? The Swiss people keep their money there, okay? They're not talking about the trading book. They're talking about, can we separate the trading book, have UBS take the trading book while our deposits remain insured by the Swiss SNB, okay? They talk about the Swiss bank's profit, but the legislation in the last paragraph is set to come up in May, okay? So that's why May Day. So UBS says that they support the government's proposal to strengthen financial stability in principle, not in reality. Just when we're talking about it, we agree with you, okay? But the adjustments to regulatory framework should be targeted, proportionate, and internationally aligned, meaning that the Swiss bank UBS has the same rules as, let's say, JP Morgan and Morgan Stanley and Citicorp and Deutsche Bank and so forth. Here's the problem. Those countries are much bigger. They can bail out their banks. Switzerland cannot bail out their banks. Okay, so what does this mean and why do we care? Well, there's two ways and only two ways to control our banks. There is no other way. All this other stuff that they propose is BS, okay? Either you lower the balance sheet. So if you have a $2 trillion balance sheet, you're told by law to lower it to $1 trillion, okay? Not that that's good enough. I'm just saying it's an example, all right? Or you sit there and you say, we want more capital, $25 billion, to add to your 110s, that's 135 billion, that's sitting on top of, or supporting, I should say, a $2 trillion book, okay? So as you can see, who wants that? So if you're Switzerland, they're terrified. Just read the Swiss papers. They talk about this every day. This is not like me making this up. This is big news in Switzerland. So one of my main narratives is that the old world is ending, which we call the Great Central Bank Financial Era, okay? We're transitioning. We're in the first year or second year of the transition. It's going to take 15 years to get to the new world. What's the new world going to be called? I don't know. Pick your choice. AI era, whatever, okay? So one of the narratives that I believe, and you can see it happening already, is that what was successful during the Great Central Bank Financial Era will not necessarily be as successful in the next era. In fact, as I believe they'll be, diminished, downgraded, whatever you say. It's not going to go away, okay? So if you look in the past era and you say, what were the 4 countries that made out best under the American system? I would say it was America, China, Germany, and Japan. Well, it doesn't take much to look around the world to see that China is basically slugging it out with everybody. Germany is in the doldrums, and Japan is hurting badly, okay? In America, we're not doing all these tariffs because everything is hunky-dory, okay? So, are we going to go away? No. Are we going to be diminished in the new world? I believe so. When you look at industry in the old world, I would argue that the banks were the biggest thing that grew during the Great Central Bank Financial Era, which I think actually makes sense, all right? Doesn't mean we're not going to have banks in the future, but I believe that the banks will be far less leveraged, far more controlled, and have how should I say this? We'll have a lot less say in the politics of the situation going forward. And I believe that the Swiss is the first data point that we have in this narrative that says, you know what, times are going to be different, okay? So what does this mean when we look out across the world, and what can we expect from this? Well, our banks are basically so out of control that we've named 29 of them GSIBs, globally systemically important banks, where we literally give them an implicit guarantee on everything that they're doing. Not explicit. We don't say in law, this is what we're going to do. We implicitly say, we can't allow you to go bankrupt because the 29 are so interconnected. If one goes, they all go. So if UBS goes, trust me, many more banks are going, all right? So the best way to it, and when you're taking a look at what UBS did. When asked to come up with more capital, the reason that they're not doing that and they're going with reducing the balance sheet is they have no ability to raise that $25 billion. None whatsoever, okay? So they're like, what are we gonna do? Because if they come in and put that on to us, our stock price is gonna crash because they're gonna have to issue more shares or AT1 bonds. Who knows, all right? So the Great Central Bank Financial Era is finally coming to a close. What do you think? Like and follow and tell me in the comments.